Hey everyone, Cameron Lombardi back here with another stock market investing video. Today we're going to be talking about selling put options on Amazon and Google, showing real examples, and then we'll just do an overall portfolio update. Before we get into that, if you all wouldn't mind hitting the like button just below the video, it really helps the video reach more people and helps the channel grow. If you like these videos, definitely subscribe and follow along to see how selling options can grow your account over time. And if you'd like to get started on your investing journey, use that first link in the description to sign up for a free Robinhood account. And by using that link, you'll get yourself a free stock to get started. All right, so let's take a look at how the portfolio is doing here. It's been a great week and a great month. As you can see on the week here, we are up about 1.76%. On the month, we are up about 7.7% or $4,000. And then year to date here, we're up about 12.25%, just over $6,100 here. So I'd consider it a pretty successful year so far. If we can keep up at this rate, hopefully we'll end up around 24 or 25% on the year. So now let's take a look at my positions that I wanted to share with you all today, and we will start with Amazon here. So I sold this put on Amazon. It expires next Friday on June 16th, as you can see on the expiration date right there. I sold one put on Amazon at a strike price of $117. And for doing so, I got paid a total of $71. As you can see, the current price of this put is $39, so that means I could buy it back if I wanted to for $39. Take my profits on it, which is about $32 right now, so we got about 45%. And I could walk away from the position, but I like to hold it to get as much profit out of this as possible. So I previously had 100 shares of Amazon and I was selling covered calls on it, and my shares got called away at $119. So now I'm selling put options here to potentially get back into the position, and I would be below that $119 strike price that I sold them for. And if it does end below that $117 price by next Friday, then I will buy 100 shares back at that price, and then I'll just flip around to selling covered calls on it again. Amazon's a great company. It has a lot of things coming in the future, and I'm definitely comfortable holding this stock. And that's the most important thing with this strategy, guys, is you should only be selling puts on stocks that you actually want to own. This shouldn't be done on hype stocks or any stocks that are super volatile. Make sure you're doing this with high quality companies. And that brings me to our next position. We will take a look at this Google put that I sold right here. So again, same expiration date. It expires on June 16th, which is next Friday. I sold this put at the $120 strike price, and I got paid $85 for doing so. So Google has actually come down a little bit since I sold this call. So you can see it shows that I'm down on the position, $27. I'm not actually down on it. I didn't lose any money. I got paid the $85 immediately, and I hold on to that no matter what. This just simply means that I could have sold this put for a little bit more, and now it's worth $112. So that's all that means. So again, if Google does end below that $120 price at the end of next Friday, I will get assigned the shares at $120 a share. Now, Google is another great stock that I see continuing to rise over time, especially as they're incorporating their AI software. So again, I'm more than happy to own Google stock and be selling covered calls or selling puts on it. So between the two here, we got a total of $156 in premium for next week. And now something that you could argue with Google and Amazon is if you were just to be holding the stock over the last month, you would have probably made more money than you would have selling covered calls or selling cash secured puts. And that is true. It's come up a lot over the past month, up 11%. So you can see it was somewhere around that $107, $108 range, and now it's at $122, and it was even higher here for a little while. So yes, holding on to the stock over the past month would have definitely made you some good profits. But if we look over time here, over the past year, it's really only up $5.30, and it's traded sideways here for quite some time. Stocks don't always go just straight up. They do trade sideways. They do go down a little bit. So that's why selling covered calls and cash secured puts while the stock is going sideways and only up $5 for the year, you would have made a lot more money in premium over this past year just selling covered calls and selling cash secured puts. So that's why I like this strategy. But I do also recommend having some shares of companies that you really like, so you do have equities in the companies. That way your account can grow as the companies grow as well. And I think a really good example of that is Tesla here. So I only have a few shares of Tesla. I have about 11 shares, but you can see I'm up 34% on those shares, $694. For 11 shares is pretty good. And I've also been selling puts on Tesla ever since it's been rising like crazy like this. I haven't, because the prices on puts are not exactly where I want them to be. So I'm just kind of letting this ride up. And if it does come back down, then I will sell some more puts on it, maybe around the $200 range or so. But this is a good example of how owning some stock and selling options on it can make you some good money as a combination. So the portfolio does have a couple more positions here. I have a Delta Airlines covered call that is expiring this Friday, and I did sell this one at $37.50. So the stock price did shoot right past my strike price. So if it does stay above that $37.50 by the end of tomorrow, then my shares will get called away. And Delta's kind of been trading sideways for a while here. So I've been making some good premium as it's been trading sideways, and then it just kind of popped off here in this last week. So I'll likely go back to selling puts on this position again and just kind of get back into my position. I have 100 shares at an average cost of $35.39. So selling it for $200 above that and then selling puts on it again is totally fine with me. Last position I want to show you guys here is on Bank of America. Same thing, we do have a covered call on Bank of America. I sold a $29 covered call on it, expiring this Friday, and the price is right around that $29 strike. So if it comes down a little bit tomorrow, then I'll keep my shares. If it continues to rise above that $29 price, again, my shares will get called away and I'll just flip back to selling puts on it. I've been happy owning Bank of America stock. I'm getting paid dividends while holding it, and I think that it still has a little ways to go to get back to the price that it was at before, around that $34 range, prior to this whole banking crisis that happened this year. I think Bank of America is a great company. It's a huge holding that Warren Buffett has. So I'm more than happy to begin selling puts on this again. And I'll probably go in with 2 puts on it so that we can eventually have 200 shares of the stock and just keep growing it over time. This isn't one that's going to make you a ton of premium. It's not a super exciting stock, but it does have consistent profits over time, and you'll collect the dividends if you do own the stock. But that's about all I have for you guys today. If you guys did like the video, be sure to let me know down in the comments. Hit that thumbs up button for me and subscribe to the channel to follow along and see how selling options can grow your portfolio. And let's grow together. Thank you all so much for watching, and I'll see you in the next one.